The FBM KLCI pared its losses to close a point lower ahead of Bank Negara's interest rate decision tomorrow. The KLCI ended the day at 1,837.04 points. Analysts said that the ever-present spectre of GE14 could have impacted market sentiment. The ringgit also strengthened to its strongest level versus the USD today at 3.9118. Broadly, the expectation is that Bank Negara will announce a 25 basis point hike in the overnight policy rate due to the stronger ringgit and election factor. Earlier in the day, Afin Huang Asset Management Berhad's MD Teng Chi Wei had said that now was not the most ideal time to enter the market. However, the equity market in the first half of Asia, including Malaysia, is expected to perform. While Teng admits that the statement sounds contradictory, he says that when the market is in a frenzy, you can't tell people not to invest. But investors should prepare to average down if you invest in today's environment. Eco World Development Group Berhad is expecting 2018 to be a year of consolidation as it holds off launching any sizable projects. Chief Dato' Chang Kim Wah notes that Eco World has invested a lot in the past 5 years. For this year, half of its investment phase is already over and its existing projects are starting to return cash. Explaining that half of Eco World's projects would have exited the investment phase this year following the completion of the first handovers. Then by 2019, the projects which have entered the growth or matured phase would have increased to 70%. He says this would help with earnings visibility and cash flow generation, which would help to bring down gearing. EcoWorld is targeting sales of 3.5 billion for this year, lower than last year. But Chang said this was due to anticipated political instability ahead of GE rather than a slowdown in the market. Fraser and Eve Holdings Berhad says that the impact of stronger ringgit and baht should be slightly favourable for the company. This as FNN is a net importer of raw materials. However, on the flip side, it would present a challenge to the company's export team. CEO Lim Yu Ho says that the economic landscape in Malaysia and Thailand will continue to be challenging despite the better numbers. However, he is hopeful that the new products to be launched would provide new growth engines. He adds that its distributor harmonisation program should deliver cross-selling benefits as more of its products reach the network, while its leaner operation structure would help to keep a hand on costs. Ernst & Young Global Limited says it is the lack of fundamental valuation and due diligence that leads to the extreme volatility of the initial coin offering market. Based on its research, ICO investors were contributing capital at an average rate of over $300,000 per second. EY says that the US is leading the race with the highest volume of ICOs at over $1 billion, followed by Russia and China with over $300 million. It said fear of missing out drives token valuations without any connection to market fundamentals. EY also warns that two other significant risks are regulatory and theft from hacking. This as different countries have varying levels of regulatory strictness for ICOs, while more than 10% of ICO funds amounting to almost $400 million are lost or stolen in hacker attacks. Ecompal Holdings Berhad's 1 billion ringgit tender book includes work for the upcoming East Coast Rail line. ED Raymond Pang says that when the country's infrastructure sector matures, there will be more private sector participation in the property market. He says that the focus on high-rise affordable housing augurs well for a piling specialist like Ecompal, as it requires more technicalities in substructures. Given the local focus, Pang says there are no plans for overseas expansion for now, explaining that there are a number of local jobs coming up, including the KL Singapore High Speed Rail and MRT3.